All right, guys, what is up? You are back for another video with DataZero. This video is, again, brand new content for you guys. New style content. You already know how we do DZ reactions. We're going to do a reaction to a recent interview with the Rat, the Gary, the Gensler, SEC former chair, Gary Gensler, who hated cryptocurrency. Let's see what he has to say. Right now, we're going to be hopping into that interview. And again, check out my live streams. We record these live and drop these videos, man. So make sure you guys check out the live streams. Let's check this out and see what he got to say. Guys, type a 1 in the chat if you guys can hear the video. Type a 1 in the chat if you guys can hear the video.
Quarterly reports. It's a proposal our next guest removed during his time at the SEC under the Biden administration. Joining us now, former SEC chair Gary Gensler. Welcome.
It's removed, guys. Remember, he was removed. Type a 1 in the chat if you guys can hear the video.
To have you.
Great to be with you, Sarah. David, to be back.
So you do not agree?
Gary the Rat Gensler, guys. Let's see what he got to say.
With the president that companies should move toward reporting less frequently to think bigger and longer term.
Look, he's had this position since 2018. He's been clear, and the SEC under Paul Atkins is going to take it up, as you say. I think if the investor base, the buy side, want to keep this, they have to speak up. For me, I think transparency helps markets. If we go to only twice a year instead of 4 times a year reporting, the markets will be a bit more volatile. It will be harder to understand what's happening.
I think they should report more frequently. So I'm against Trump on this, and I'm kind of for the Rat, Gary Gensler, on this. But that's probably the only thing we agree on.
Happening in the markets. And so, yes, I'm supportive of. It's worked for 55 years in the U.S. We've got the greatest capital markets.
But we don't have long-term investing. At least that is, I mean, we all know the whole period of even a mutual fund is very short, and companies are constantly complaining to me as well that I can't get a long-term shareholder base.
David, I'm going to take the other side of that.
Please.
I think that this phenomenal economy that we have is in part because of that long-term investing in the public markets and in the private markets. Look at all the spend right now, measured probably in the $200 to $300 billion a year on artificial intelligence by these big mega cap companies,
yes.
Right? They're doing that for the long term. They're not earning a bunch of profits in 2025. So I think it's an important issue, focusing on the long run, but I think the U.S. capital markets actually do that reasonably.
There's also an
I'm all for long-term investment, and I think long-term investment is not only great for the stock market, but it's great for just building wealth in general.
argument that companies aren't going public as much because there's just so much paperwork and disclosure and the pressure around.
Now, the thing about having less reporting is it would cost less money and stuff like that. It would be less waste of paper and stuff like that.
3-month earnings is otherwise unnecessary for them to grow and think long term, especially smaller cap companies.
Sarah, there's where I will agree somewhat with the corporate executives. There's a cost to corporate disclosure. The overall thing about corporate disclosure is it creates a big public good that the economy works and functions better. So again, the president's been clear. He's been clear since 2018 on this. Paul Atkins and the SEC will take it up. Investors and the buy side, if they say, hey, this is really important to institutional investors as well as everyday investors, and the media, if you find it really important, you need to speak up on the other side. That's how public debates happen.
And we may very well have it, and you could imagine the investors will be on one side of that debate, as you obviously say. I'm curious, Gary, your thoughts about the private markets, because we just saw a graphic. IPOs are up this year, but, I mean, the numbers are staggering in the private markets. The valuations, the ability to raise money, OpenAI, what that company's been able to do. I'm curious as to your perspective on it. It doesn't seem like that
OpenAI valuation going crazy.
It's going to change anytime soon.
I don't think so. And I think it's been one of the strengths of our U.S. capital markets that we have that lively competition between the public markets and the private markets. And we as a nation have benefited.
AI is becoming a bubble, though. Like, it's growing and growing and growing, and it's getting deeper and deeper into the economy. If this thing doesn't pan out, man, it could be a big bubble and a huge systemic risk.
From everything that's happened from the venture capital field and the private equity field. But you do have greater transparency in the liquid markets. And thank God there are still the liquid markets at $60 to $70 trillion in the U.S. I would note our capital markets, our liquid equity markets, are 4 times bigger than all of Europe. So I'm not sure
we have one
why
company
we
whose
want to adopt.
We have one company whose market cap is larger than every market, basically, other than I think Japan. That would be Nvidia.
Yeah, Nvidia. I was about to say.
So, but you're
I was about to say
absolutely right.
Nvidia's market cap is absolutely huge, and it's one company. I was gonna say it before you said it. I should have.
Is larger than the entire.
Which is also Nvidia could also be a systemic risk as well, because if Nvidia pulls back or tanks, the market would tank with it.
London Stock Exchange.
But does that concern you at all? The 10 stocks, let's call it, represent 40% of the S&P?
Look,
and that is what I'm saying about the bubble. This is a systemic risk. The AI stocks, the tech stocks and stuff like that. This is a huge risk, and that is definitely concerning it should be concerning to anybody with eyes. 10 stocks are making up, like you said, about 30% of the whole entire S&P, and that's been the whole catalyst of this rally. So that should be concerning to anybody.
the concentration is high. Markets go up, markets go down. I'm not giving investment advice here.
No, God.
You can, by the way, now.
I understand that. Yeah. But there's a lot of talk about, do we have an AI bubble right now? And I think that's a worthwhile debate, and a lot of investors are looking at that. We have a market.
We definitely have an AI bubble. If you can't tell and look at the S&P 500 and say that that's an AI bubble, then I don't know what to tell you, dog. We definitely have a bubble, and it's a systemic risk, and it's getting deeper and deeper into the economy. This stock market right now is built on stilts. Right now we have SPY absolutely pumping to the upside. I mean, come on, guys. Just look at the chart. It's a systemic risk, and AI is definitely a bubble.
Market that's really been lifted up by all this buzz, and we have an economy where the investment in data centers, the investments in chips are growing so quickly that it's, some estimates, it was about half of the economic growth in the first 6 months of this year.
Leave your thoughts in the comments,
because
guys.
of this one field, even if it just flattens out. And this is a whole field that right now
leave your comments in the thoughts in the comments.
Spending more than it's earning. Back to my point that we do long-term invest even in the big liquid markets. But what if that turns? What if all of a sudden all these AI spending?
Yeah, that's a key question investors are grappling with every day.
I just want to ask you big picture. Now that you are out of the administration,
if that happens, the market would crash. It's not a question. Like I said, if Nvidia goes down, if all of these AI companies start to go down, the market will crash. It's not even a question what would happen if the spending stopped. It's not even a question.
And you see what the SEC...
And that's why rates had to get cut.
Under Paul Atkins is doing. They are reversing a lot of what you did and seemingly have completely opposite priorities on issues like crypto, for instance. How do you think about sort of what that means for what you were able to do at the SEC, and how are you feeling about what they're doing now?
So I'm very proud of what we accomplished. I think that the reforms we got done in the stock markets, even something is kind of plain and vanilla as shortening the settlement cycle from 2 days to 1 day and helping our markets be that much more efficient. And Europe is now chasing us and trying to do that. But for regular investors, I think we put in place reforms that I think this administration is continuing in the U.S. Treasury markets to keep them more liquid. But look, elections have consequences, and I respect our democratic forms, and naturally Chair Atkins is going to take a different approach than his predecessor, and his successor may take a different approach.
And the crypto community is ecstatic not to have you there anymore, and to have him there right now. What you did around security.
Dang, she just tore into him. The crypto community is ecstatic to have Gigi out. Look at the man's face right now. This guy is sick. This is the face of somebody who's absolutely in despair on TV right now, man. She just crushed him.
And enforcement actions. And looking back on it, I mean, do you think that was the right call?
Yes, I think.
Because look, now we have this like burgeoning industry, and there's so much more innovation and leadership in the U.S.
And a lot more
crypto.
capital coming into it.
Yeah.
There may be more capital in terms of the interest in the public. The public is interested. I get that. But I took an oath of office. I also ran a law enforcement agency. And my predecessor, Jay Clayton, a very fine individual, ran the SEC. He's now the head of a law enforcement agency again up here in New York.
Yep.
Was bringing many cases in this field. Was bringing over his tenure about 80 to 100 cases. Over my tenure, we brought about 100 cases.
Dude literally just said that the public is more interested in crypto and institutions are not. We're seeing institutional interest in crypto grow every single day. This guy is lost. ETFs, everything.
We were consistently trying to ensure for investor protection. And in the midst of it, we had a lot of fraudsters. Look at Sam Bankman-Fried, and he wasn't alone. And so investor protection. So when I look at the field that trades mostly on momentum, mostly on, frankly, hype.
Guys, we are seeing more and more fundamentals for crypto. It is not as much speculation as before. This guy is completely lost. We're seeing more and more fundamentals, more and more legislation getting passed, more and more things like spot ETFs, which are driving up price, which are driving up demand, and things like Bitcoin having scarcity. That's a huge aspect of the price going up. This guy is completely lost.
For investors.
You think this is dangerous, what they're doing?
I think that for investors, everyday investors, the 5 to 10% of Americans who invest in crypto, and it's hard to get the real, but that it's a highly speculative, very risky asset. And in most of these tokens, put aside Bitcoin, but most of the other tokens are not tied to any fundamentals. And there's
Okay, I will agree with that. Meme coins and stuff need to go. Meme coins definitely need to go. I really don't like that. That's a lot of money that could be in the top projects. I normally stay in the top 100 altcoins, but Bitcoin, Ethereum, XRP, Cardano, ADA, these all have not only use cases, but scarcity aspects as well.
5 or 10,000 of these tokens. So usually over time, you find new equilibriums. Like Warren Buffett would say, what are the goods? What are the revenues? What are they selling? And so forth.
Well, we certainly appreciate you joining us on all of these topics and hope you'll come back.
Thank you,
Now
Sarah.
that you're at MIT.
Thank you, David.
Gary Gensler, the former chair.
Wait, did he say, oh, he said thank you, Sarah. I thought he said thank you, sir. What the heck?
Of the SEC.
All right, guys, that was former chair SEC Gary Gensler, man. Former chair SEC Gary Gensler. Remember, we record these videos live, so make sure you guys check them out, man. And also check out the replays. I appreciate you guys. Make sure you guys like and subscribe if you found that video informative, educational, entertaining. And as always, man, I appreciate you guys. Make sure you check out the live streams. Have fun. Stay safe. Make money. Peace out, y'all.